I wanted to talk a little bit about a couple of the videos that I made in the past where SCHD, or I said that SCHD was dropping like a rock. The same thing was kind of going on too in some of the broader market as well. I believe there's someone, a day trader by the way, by the name of Carmen Rosado, who I actually kind of went through his story and what happened with him when he kind of day traded SCHD, which was extremely interesting. He was actually taking a look at SCHD, or I should say, trading the S&P 500. I should say, excuse me. He was trading the S&P 500, and he had significant losses. I believe in one of his videos. I mean, I don't want to speak for him, and I don't have it pulled up right now, but he had very significant losses in the month of January, where he says it was around Christmas time all the way until around, I want to say January 8th, there was extreme volatility in the market. And I actually do agree with him. There was extreme volatility in the market during that time, and there kind of still is with certain stocks and ETFs. And when you take a look at SCHD and what happened there since, I want to say around like mid-November, it did fall. I mean, it fell pretty significantly from around November 15th or 14th, around that time. However, though, I did say in this video where after it kind of dropped like a rock, so to speak, I really did predict that if you were a long-term investor, it could potentially be a buying opportunity where if there is some sort of dip and we have a really nice, what do you call it? A nice year for stocks from a nice bullish market, potentially for SCHD, then it could be, depending on who you are and what kind of type of investor you are, pretty good for you as a long-term bet. Now, of course, I'm just trying to pull up my notes here. Anyway, of course, I did predict in the video that it would bounce back, and it already has. If you're a long-term holder of, let's just say, the S&P 500, okay, a better example is the S&P 500, and you have obviously a diversified portfolio. I took a look at Peter Lynch's books. I read 2 of his books in the past couple weeks, where, I mean, obviously these are old books, okay, but they're not old in the sense of actual principles that will be around for the next 40, 50, 100 years from now. They will remain. Okay, these principles that Peter Lynch explains will remain. And he explains that having a diversified portfolio with stocks that have a great dividend are great or fantastic for you and your portfolio, okay? But SCHD, or I should say S&P 500, is phenomenal in the sense that, obviously for a long-term hold, if you're a long-term investor, then that's great for you. Obviously, if you buy in at a dip and you hold until potentially retirement or something, and you let the interest kind of compound over time, and you just let it do its work. The same could potentially, God willing, be said with SCHD. And the same thing goes with the dividends. Obviously, Peter Lynch, he always says do a 6-month checkup on your investments. And if something isn't working out, then you can make a change. You can change it up. That nothing has been set in stone by saying that, a certain individual stock that you have, let's just say, doesn't do well, you can't sell the stock. Obviously you can. Warren Buffett has done this. Peter Lynch has done this. The best individual investors have done this. So, obviously, that's something you need to keep in mind when you're an investor. Whether it's in SCHD, whether it's in the S&P 500, whether it's in Waste Management or Eli Lilly or whatever kind of individual stock you're in, or any sort of ETF, then it's really something that you need to keep in mind. And again, when you're looking at any sort of stock and you see that it's a great company and it's potentially undervalued or something, and the debt, there's no debt, there's a really steady increase in its dividend, and it's a great company to potentially invest in, then it's not the worst thing in the world potentially, of course, if you do your actual homework to pull the trigger on the stock. Now, could this be said with SCHD? Well, you tell me. You tell me if it's a good investment for you, because everybody's different. Everyone is different, obviously, and if you love dividends and you love the trajectory, you love that what the fund, what it holds in its in its portfolio, if you like all that, if you want to invest in something like that, then who am I to say you shouldn't go for it? So, of course, at the same time too, if you're an investor that wants to go with VOO, go with VOO. Nobody said, or I actually had someone comment that they hold BRK. I have nothing against BRK. BRK is a company where they have a lot of companies. They own a lot of companies within within the fund, within this company. They have Geico. They have See's Candies. They have Dairy Queen. They have a bunch of companies all wrapped into one. So I'm not going to say that it's not a great company to diversify your portfolio in. Because he commented actually on a video that I was doing about SCHD, and I said I have nothing against BRK. I have nothing against BRK at all. I mean, Berkshire is a great company. So it really just depends on what type of investor you are and what type of how much homework that you've done in the stocks. If you're completely lost, if you've done poorly in the stock market, then you may be an investor in VOO. You might want to invest in the S&P 500. If you are someone who loves dividends, SCHD might be for you. I don't know. I mean, that's just how I feel about that. So, if you like this video, leave a like, subscribe, and hit the notification bell for more. Thank you for watching, and I'll see you in the next one.